Hello everyone, welcome back to my channel. This is Roger Mansourian with Vantage Realty and Home Loans. This is actually my third time recording this video because of technical difficulties, so I'm going to take it as a reason or an excuse to bring even more energy and even more valuable content to you guys. So this video, I'm going to be talking to you guys about getting a home loan during the coronavirus. Let's just dive right in. All right, so the first thing that I wanted to talk about was news that came out last week from Chase. So let's take a quick look at the article. All right, so Chase announced they're going to raise mortgage borrowing standards. So basically what they're saying is they're going to make it a little bit harder to get a home loan with Chase. So here in the article it says Chase will raise mortgage borrowing standards starting Tuesday, Reuters reported, citing Chief Marketing Officer for Home Lending Businesses, Amy Bonetabatis. So customers applying for a new mortgage will need a credit score of at least 700 and be asked to put 20% of the home's value as a down payment. Okay, so basically they're saying the minimum requirement is a 700 credit score and 20% down payment. So immediately when I saw this news, I thought to myself, wow, Chase is making it a lot harder to get a home loan. And I want to basically bring some information to you guys and kind of share with you that this is not the case with all banks out there. So a mortgage broker like myself, I work with about a dozen different lenders. And out of those dozen different lenders, all of them have different regulations and basically what's called overlays. Overlays are additional requirements because of Corona, because people are getting laid off, because of all this uncertainty. They're adding extra precautionary guidelines when you get a home loan. That's exactly what Chase is doing. Okay, so the first thing that I kind of want to explain is Chase's main business is not mortgage lending. It's not home loans. Okay, so that's the first thing that I want my viewers to understand. Chase is in the business, and this goes for all of the major banks, Wells Fargo, Bank of America, Citi, Chase, all of them. Okay, their main business is checking accounts, savings accounts, and investment money that you hold with them. They want to hold your money so they can then in turn lend it and get interest on it. So that's what their main business is. Okay, they already have you as a customer, so yes, they will offer a mortgage, but that's not their specialty. That's not their niche. So when it comes to getting a mortgage product from Chase, you're not going to get as much variety and you're not going to get as much flexibility because it's not the main thing that they do. Okay, so that's the first thing to understand about working with a bank like Chase. They can be great in some situations, but if you're looking for flexibility, a mortgage broker like myself probably is going to have more options. Okay, so some of the top banks that I work with are Quicken Home Loans. You've probably heard of them, also known as Rocket Mortgage, United Wholesale Mortgage, One American Mortgage. And these companies, all they do are home loans. All they do are mortgages. That's it. Okay. So Chase is more like a grocery store where you go in, you buy your meat and your bread and your vegetables. And then while you're checking out, they throw gum and candy at the checkout aisle, right? They're trying to throw in and trying to upsell you on a couple items. That's what Chase is doing, right? You're in there, you're already a customer, you're depositing your check. Hey, let's just offer you a home loan. We can make a little bit of money, so why not? So that's what they do. But companies like Quicken, their sole product are mortgages. So that's all they do. So they're great at it. They offer the best rates. They offer the best service. They offer the most flexibility. So I just want to show you guys a quick example of a loan with Quicken, what that would look like. All right, so now I'm on my Quicken broker website where basically I can plug in a scenario and it'll tell me what the interest rate is based on that scenario. So we know Chase does not allow you to buy a house with less than 20%. So what I did was I put a 700 FICO score, but I put 15, excuse me, I had to burp there. All right, I put 15% as a down payment. Okay, so Chase doesn't allow that. Let's just say you're trying to buy a house. You only have 15% or 10%. You don't have the full 20. So let's go to Quicken and see what kind of loan we can get you. So 700 FICO, 1 unit single family. The loan's going to be 510 and you're putting 15% down on a conventional 30-year fixed. you are looking at a, drum roll please, 3.875% interest rate. And that gets you a credit of $600, which you can use to cover your appraisal fee. So that's still pretty good. Still a pretty good rate. Under 4%. You're putting 15% down. See, this is not even an option with Chase. You can't even do this anymore. Okay. So actually with Quicken, you can go to 10%, even 5% down. The rate's going to be higher, but it's possible. So really quickly, one other thing I want to show you while we're in here. Quicken has a broker tool. It's called Guru, and it basically talks about all of the underwriting guidelines with Quicken. Okay, so I'm on the Guru website, and at the bottom here, it says Corona Policy Updates. So let's see what other requirements that Quicken is requiring right now. So a couple weeks ago, when Corona was brand new, I made a video talking about how some of the banks were adding extra guidelines to their loans. So this was maybe 2-3 weeks ago. Since then, things have kind of cooled off, and now that we kind of know what to expect, some of the requirements have now been pulled back. So now it's kind of getting back to normal, basically. So I'm just going to look at a couple of quick things here that I think are important so that we can compare a bank like Quicken and working with a mortgage broker to getting a home loan with Chase. Okay, so let's just look at furlough income here. So some people are being furloughed. Like I have clients who are in the airline business. They're getting furloughed, so they're getting some money, not their full pay. But let's just see what Quicken is doing with people who are on furlough. All right, so furlough income. When a client is furloughed and receiving a portion of their pay, qualify the client based on the following. If the client is salary, qualify the client with the new lower salary amount. So basically, they're going to take the amount that you're getting as a furlough versus your regular pay. If a client is hourly and receiving few hours, calculate the hourly income based on new hours. If a client is hourly but still 40 plus hours, qualify the client with a new lower rate. So this is a great example. Okay, so Quicken is so ahead of the game or so flexible, they're still willing, if you can verify that you're still working at a company, even if you're on furlough, they will give you a home loan based on the lower income. Okay, now why is this so important? Why is this a big deal right now? I'll tell you why. Right now, with fear at an all-time high, right? People selling their homes are not even allowing open houses. They're not even allowing people to come and take a look at their house that they're selling. They're doing virtual tours, okay? I just went into escrow with my most recent clients. We went into escrow yesterday. Yeah, yesterday was Monday. Today's Tuesday. We went into escrow yesterday. This is a home that was listed at $597,000. There was a comp that sold within the last 3 months, a property that already sold. It was the exact same square footage, built the exact same year. It did not have a pool, and it sold for $620,000. Normally, a house like this in a regular market, if they had open houses and they had people coming looking at it, the price would have been competitive, and the price would have gone up to at least $620,000 because that's what the comps say. We got into escrow at $590,000, guys. $30,000 undervalued, okay? So what a great deal my clients got on this house. They're walking into a house already with $30,000 in equity because we know based on the comp that sold a couple months ago, this house is worth at least $620,000, at least. But because everyone is scared, and that's just kind of the environment right now. Everyone is scared. People are not looking to buy houses. People who are selling houses, might be in a desperate situation. Maybe they have to sell. They have to move. Now's the time to take advantage. Okay, if you're a buyer, take advantage of these times right now because you could still get a low rate and you can still get a house under market value like my clients are doing right now. So I know it can be scary to put an offer on a house that you haven't seen in person. And that's exactly what happened in this situation. The house that was listed, they weren't allowing any showings. They said, put in an offer, make it subject to interior inspection. Okay, that's what we did. We put in an offer subject to an interior inspection, and we had 2 other offers that we were competing against. We got our offer accepted. And if you haven't seen my video, I made a video about how to get your offer accepted in a competitive market. Check it out right here. But my clients got their offer accepted for $590 when a house is worth $620. Okay, that's a great freaking deal. And the house is a little bit outdated. Once they do a little bit of updates, it's going to be worth even more than $620. It's going to be worth high 600s, in my opinion. So now's the time to take advantage. Put in an offer subject to an interior inspection. If they're not allowing actual appointments, if they're not allowing actual viewings, make it subject to. Put in a lowball offer. You never know. You might get your offer accepted, and you might mess around and get a really, really great deal on your next home purchase. And interest rates are still really, really good. I think there's so much potential right now. This is your time. This is the opportunity to get out there. You know, if you just try to get a little bit of guts, right? I know it could be scary, but just like my clients did, just have a little bit of guts, have a little bit of faith. Remember, you can always cancel a real estate contract after you go see the property. Say, hey, I didn't like it. I'm canceling. I don't want this house anymore. You don't have to waste $1. Okay, all you have to do is spend a few minutes and sign an offer and have your agent send it in. So now's the time to take advantage. So many opportunities out there, and I hope you guys liked the video. Please smash up the like button, hit the subscribe button. Please share with anyone that who you might think might benefit from these videos. We passed 100 subscribers, so thank you guys so much. I'm so grateful. Hope to bring you guys lots and lots of great content over the coming weeks. I release videos every single Friday, so keep an eye out for that. And please hit the subscribe button and share with someone who might find this useful. Thank you guys so much, and I'll see you next time.